All right. There we go. It's live now. Oh, wait, can you guys see it? Like, do you see the website or the folder right now? Oh shit. Wrong one. My bad. Chain window. Now you see the website? All right. Yeah, this is just a sneak peek. The website is offline right now. Just quickly show you before I start the trading lesson. This is for our NFT project. Um, it's starting to look. Why is everything so freaking laggy? Yeah, so collections, roadmap is going to be here, a little blog, our team, blah blah blah. Anyways, so do you guys have your trading views set up at all? For what do you use to look at the indicators and stuff like that? All right, guys. So I recommend you all going to TradingView.com and just creating a free account. And free account is more than you need, to be honest with you, because free account lets you have 3 indicators, and literally that's all you guys gonna need. That's all. So I'm not gonna wait till you create it, but just keep that in mind. Just TradingView.com. So then right here, when you get on it in charts, you can just type a pair, for example, BTC USDT, and then you can see everywhere that it's featured. Like we got Binance, that's what I use. We got Bybit, KuCoin. Um, but we're trading perpetual futures, so it's better to find Binance perpetual futures. Although it doesn't really matter, but you want to find perpetual futures just because the price is more correct. Because the price from spot Bitcoin on Binance differs from the futures Bitcoin by like anywhere from like 30 to 40 bucks. It always fluctuates, but doesn't matter. In general, it's the same trend. It's the same patterns. Everything is the same, just a little bit of price difference. So once you get this, you can get this chart. You can change the color of it if you want by right-clicking on the screen. You can go color theme, dark. Everything turns dark. I like this more. You can also change many things. Like you can reset the chart. Um, Anyways, that's that. Now, you need 3 indicators. There's 3 indicators I use to make all these successful trades all the time. Are very simple. It's 200 EMA right here. It says EMA. RSI, which is relative strength index. It shows the if Bitcoin in this case is oversold or overbought. So if you see this line down below here, it means it's oversold. It has to go up. If you see the line over here, as you can see, it means it's overbought, and then we got a downtrend right after that. Sometimes it goes beyond the frame, and that's what, see, like if you actually extend it, you can see that it went a little bit above the actual frame. Here it stays within it, and so on, so on. Why is my computer so freaking laggy? Wow. I feel like I'm on a school computer or some shit. Okay. And then MACD. MACD is it shows you volume reversals. So as you see here, the line, when the blue line crosses the red line, we start getting into positive volume, and RSI is still going up, so we get this positive trend right here. So if you were to enter this trade when the lines crossed, you would have gotten 5%. That's without any leverage. So if you do 50x leverage, 5 times 5 is 25, you would have gotten 250% trade. Anyways, so now to add these indicators, you click here, indicator, and you just type in EMA. You click on moving average exponential. That's what it stands for. Then you click on it. It adds it right here. You click on settings. You go inputs, and here it's going to say 9. 9 just means 9 days. Any number you put here means the amount of days, and it's going to show you the average trend price movement line of in that period of time. So you want to set it to 200. So 200 days moving average. So this is added. Now you go to indicators, you type in RSI, Relative Strength Index. You would click on it and you keep it default. You don't need to change anything. That's it. And then you would do the same thing for MACD. You would type in MACD, Moving Average Convergence Divergence. You click on that and you keep it default as well. You don't need to change anything. Now, this is your time frames right here. So you want to switch it to so here's how we trade, guys. Basically, you need to cross-check um, many time frames, but as a general rule of thumb, you want to just in the beginning of the day, you just want to see daily chart. You see that we're really oversold here. We're trading below the 200 EMA line. That means we're in a downtrend. Anything that trades below on a 4-hour or daily chart, if we're trading below the line, that means it's a downtrend. So our MACD is very negative volume, but you can see the volume starts actually curling up. That means there's more positive pressure going on. The lines haven't crossed yet, but you can see that they're well on the move to do that. So this chart, one daily chart, all these indicators, they take a very long time to develop because it's a very large time frame. So you won't see this change very shortly. This can play out in a matter of weeks. So you just want to take a look at that, right? So general direction, you know that the reversal might be coming soon because it's oversold. The volume is trying to reverse and start being positive. So okay, you got that. Then you switch to a 4-hour. So on a 4-hour, we're trading below 200 EMA as well. That means we are in the downtrend. However, as you see, we are climbing up. This is also the reason why a daily chart shows us signs of positive volume. We're going up. We haven't reached, as you see here, usually before we start curling down again, we become overbought. So we have a lot of positive movement still available for us on a 4-hour chart. Then we switch to a 1-hour chart. On a 1-hour chart, we're trading much closer to a 200 EMA, much closer. We already touched it today. This is when I told you guys to open that short position because we haven't tested it. As you scroll back, all this candle represents 1 hour, 1 hour, 1 hour, 1 hour, 1 hour. We haven't touched 200 EMA in a while. That means that it's the first 200 EMA touch in a very, very long time. That means usually it's never going to break it. On rare occasions, it would actually break it. Usually it just touches it and bounces back down. So this would be a very, very good entry for you to enter. Also because you know the stop loss right away. So you know if you enter at this line, and by the way, the value of this line shows right here, 21,635. This is the value of this orange line. So you could even open an automatic short position. You can just set a limit order saying you want to short at 21,634. And then you would set a stop loss slightly above 200 EMA, slightly above it. Because as you can see this candle here, let's zoom in. Actually, I'll switch to a 15-minute chart just so you see better. Where was it? Shit, I won't even find it now. Doesn't matter. It doesn't matter. So it tried to squeeze basically. It went a little bit kind of in it, a little bit above it. This is why you want to set your stop loss a little bit above that and just open a short position and just freaking ride it. Now, how do we use RSI and MACD? So as you see, when this green candle, this is when I call this position, when this green candle was just climbing up, I knew I was going to touch it. Because look how our RSI was moving. It was moving higher and higher and higher and higher. And here, it finally kind of started already losing its strength, but I saw that it's getting close to 200 EMA, and also our MACD started curling down. You want these two indicators, RSI and MACD, to be on the same page. You want them to be both either up or both either down. Sometimes they're not. Sometimes you would see RSI overbought and MACD would be here. This is, you want double confirmation. These two signals need to align for you to secure a very safe position. Because in some occasions, I don't know, my computer's so glitchy right now. I want to show you. in some occasions, you see how MACD is still here, but RSI is already here. This wouldn't be very good. You want these two indicators to line up. Once they line up, you have a much more chance of winning the trade. So now we start. I think we're actually going down right now. Let's see. No, we're still. So right here, in this case, you see that our MACD is down here on a 15-minute chart, and our RSI already did go down. So it technically, as soon as it touches oversold, it needs to start climbing. So it might have these like kind of ups and downs, but it did touch the oversold position. So you know that it's been at the bottom already. Since it touched the bottom, it hasn't been up yet. You also see that our MACD lines are getting thinner and thinner gap between them, so blue line wants to cross over. We're also trading above 200 EMA, which usually means an uptrend on a smaller frame. I know we're trading below it on a 1 hour, but in this particular case, the position that we opened, guys, and you saw that those 200% and 150% profits that happened, is because we opened a position right here when it touched 200 EMA and it bounced back up, because we knew right here that's when it happened. If you draw a line up here, this represents this candle exactly. So it touched the oversold position, it touched the EMA. We know that when something touches EMA, it should bounce back up. So we set a stop loss slightly below the 200 EMA, and we opened a long position. You can take profits along the way anywhere you want. It's up to you. Don't be too greedy. I personally took the profits almost at the top, but I closed only 50% of the position, and now my position, another 50% actually went down. And I actually, that 50% position that I closed up here, I got it back in USDT, right? So I waited for the candle down, and I actually used that money that I got from this trade to re-enter the same position that I had left over, the 50%, to re-enter it again, and I'm going to start climbing it up again, because I know that our MACD is crossing. It's going into positive volume. I know that RSI still needs to climb, and I know that we have touched the 200 EMA once. So this should be a very profitable position, and especially the way I did it, that I'm actually going to climb it twice with a bigger portion size. You can also, once you start getting away, once you start actually making money on this position, you don't need, like I said, you don't need to close the whole position. You can move your stop loss to break even. You can start actually moving stop loss if you want even higher and higher and higher to stay safer, to secure your profits. Always set stop loss. Never get lazy or think that it's not gonna, like right now, even though I'm sure that it's going up, you guys, you never know. This thing can just tank, like in an instant it can tank, and the stop loss is the only thing that will save me, because I have a fairly large position right now. I have over $1,000 in this position at 75x leverage. So that's insane, guys. I'm basically trading $75,000 right now, multiple bitcoins at once. So stop loss is very important, always. So when I would start exiting this position, you can start exiting it when RSI hits about 50, like half the chart here. And when these lines cross and they start spreading apart, you see big volume, and you know that the volume, whenever there's a big volume like this, you know that it's going to start curling back down. So it's a good place to take some profits. If you want, you can wait, but we're not here to teach you how much profits to take, guys. Not a single trader lost money who took green. It's totally up to you, especially when you're starting out. Don't be greedy at all. Even if you get 3% trade, 4% trade, this is very good. If you can be consistent with 3% trades every day, like I showed in my video, you can be a millionaire within a year if you're trading just with $100. And this is absolutely true. A lot of people don't believe this, but guys, I've gotten to the point when my stop loss would be negative $95,000, and I wouldn't even care about it. So it's up to you when to exit. It doesn't mean you need to do 3% every day for an entire year. You get $10,000, you're welcome to exit. You don't need to. The problem with this challenge is that your portion is always the maximum out of $100, right? Um, A lot of traders don't understand this because they always like the correct way to trade is to, and you see, look, confirmation, we're going up, guys. So I'm making shit tons of money, double climbing the same position basically. This concept is very simple. This concept is called retail trading. Our other trader K9, he's actually utilizing SMC, which is smart money investing. He's basically following where institutions and hedge funds are investing millions of dollars. This is a very good technique too. However, retail investing is much simpler for you to begin, and it can also be very, very lucrative. Um, Later on, once you get a grasp of retail investing, you can get into SMC concepts with K9. He can help you with that. He has nice courses. But don't worry about that for now. I've been trading retail for almost a decade, um, and it's been doing wonders, guys. As long as you get double confirmation, as long as you utilize your 200 EMA, and be disciplined and have risk reward, very strong stop losses, um, you'll do just fine. Most of the time, even if you have the best, like even if you use a strategy to the best of your knowledge, like I am, you still won't be successful if you don't have risk management and if you don't set your stop losses. Stop losses is 99.9% of all trading, and portion size of your portfolio. Technically, when you're starting trading, if you have $100, you want to trade with $5 positions. That way, you have 20 chances to trade that $100. I know it's slow, I know it's boring, but you kind of want to do that. You don't want to start getting into big positions right away, because if you do lose the $100 right away, then you would need to put another $100. That way you can at least test it, get a feel for it, see how charts climb, see how charts fall, and have at least 20 tries to do that. What else? Also, when you're entering the position, so here, for example, when you're entering a position here, hold on. I want to explain to you one more concept of what actually separates newbies from good retail traders is you always gotta wait for a short squeeze. So when, for example, we go back in time, so this candle when it was just starting, imagine this wasn't here. Imagine this candle was just climbing, right? So a lot of people would think to open a short position here because it's touching 200 EMA, right? Look, our RSI is oversold, but you wouldn't know this. It would be like right here. This is just when it closed, it was like that. It's a lagging indicator. Basically, right now it's showing us this, but in real time it wouldn't show you this. You always, if you think that MACD is going to be crossing here, if you think that RSI is already oversold and you're opening the position, set a very tight stop loss, like I said before, or always wait for a squeeze. What squeeze is um, whales and big investors, they know that these indicators exist. They know what newbies are going to do. They know that this is your first time trading and you just learn these indicators and you want to use them. So what they do is they just artificially pump the candle, and they, in this case, it actually went up a little bit down and then it fell back down. So this is what they did. They squeezed you. This is an artificial pump. They knew that you were going to open a short here and they squeezed you. It's called a short squeeze. Why it's called a short squeeze is because you open a short and they wanted to liquidate you. So if you didn't set a stop loss, this candle would have went up and liquidated all your funds. So what I like to do is I always wait for the squeeze candle. Most of the time it comes. If it doesn't come, whatever, you're going to see a next candle appear under it, and you're going to see the candle is starting to be weak and it's actually going to curl down. But if the candle is still pushing up, if the candle has a very fat body, you know there's a possibility of a squeeze. So you would wait for them to squeeze, all the shorts would get liquidated, and you would open a short position a little bit above it, and then as you can see it squeezed a little bit more, but you'd be safer here, and then it went down and you would take your profits somewhere around here, because um, it's kind of fuckety here. So this is where I said you guys want to take profits, because you never know. Like, you thought you entered a good position. Yeah, you did make a lot of money. So if you entered the position here and closed it here, you would have gotten almost 3%. At 50x, that would be 150%. That's more than enough profits for you guys. More than enough profits. If I was you, I would close it right when it started licking 200 EMA from above, and I would close it right there. Um, yeah, That's pretty much it, guys. I don't know if I was going too fast. This is all recorded, so I can show it to you after. If you need to rewatch it. If you have any questions, ask away. But that's pretty much it. Thanks for watching, guys.